What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Friday, May 17th. Alright guys, Tesla stock here today up 85 cents a share. That's plus 0.49% in regular trading hours. Down a little bit here after hours. Listen, volume today especially is very low in the after hours, so listen, take that with a grain of salt. Let's take a look at everything the market has to offer today to give us a better understanding heading into tomorrow. And we will do that by starting with the 5-minute chart with a quick volume profile analysis. This is a peek under the hood, guys, to pull out directional bullish or bearish bias that lie below the underlying moves. Listen, guys, by the way, Tesla's a daily upload. So if you're new here or you haven't done so already, please, I appreciate you subscribing to the channel, and I will keep the Tesla videos coming. My goal here is 10,000. I think we can hit that, but not anytime soon without your help. All right, guys, so let's take a look here and pull up the volume. You can see off the open, high volume on that big red bar. That's very normal. It's very contextual. That's not out of the ordinary, okay? And if we compare that to yesterday, it's actually quite a bit lower volume compared to what we saw yesterday off the open. Volume then tanks off. Now, here's what I'll say about this period from like the open, 5 minutes after the open, to about an hour and a half into the trading day. You guys notice that throughout this whole period, it's broken up by a total of 7 red bars. And typically, we see the red bars either equal to or much lower than the previous green bar. All right. What I find really interesting about that is that's not like an everyday thing. We typically see the bars after the morning, the initial off the open fade in volume. If there's no bias present, at least that's obvious, they tend to kind of cancel themselves out. And I don't want to read into this too much because is there super obvious, heavily bullish bias in the morning here? Well, no. But I think I would be uncomfortable moving on without at least acknowledging that whenever we get a break with a red bar, or in one case 2 red bars, volume fades a little bit, at least tends to, and it's very short-lived. Okay, so is there a slight amount of bullish bias in the morning? Yes. Is it heavy and overwhelming and we should really read into that? Absolutely not. Okay, now moving through the rest of the day, kind of underwhelming here. A little red pop there, a little green pop there. Yeah, they're going to kind of cancel each other out, not to mention the fact that there's way too much of a risk of fooled by randomness on single bar outliers like that. And then moving into the close, very normal close. High volume bar immediately after the bell. That's when algorithms trigger to rebalance, so nothing really out of the ordinary there. Let's move on now. Let's take a look at the psychological self-fulfilling prophecy levels that we're going to see a lot of traders making decisions around, and a lot of money is watching. So we should be aware of where those levels lie and what we're looking for in either scenario, bullish or bearish. So you guys remember yesterday's video. We were just on top of that 200 period moving average heading into the close. This morning, we really tried hard. The bears tried really hard to push below, and we kind of came back up like a buoy, right? However, we got stopped short by the 50 period moving average. And we closed just right on top of that thing. So listen, these two are now forming a very tight channel, about a 1 point wide channel. So tomorrow, if you're a bear, you have 2 goals. Use the 50 period as a resistance, reject hard off of it, and use that momentum to carry you downside through the 200 on high volume. And then as or if at all we come back up and retest the 200 period in that scenario, you want that to occur on lower volume and then reject hard on higher volume so that you can be treating both of those as resistance in a single day. That would be a good thing if you're a bear. Now listen, bulls, any retest of the 200 period, this gray line, obviously you want to see that hold as support, ideally bouncing on as much volume as you can get. But the real goal is to use this 50 period. We're currently right on top of it as support. Okay, get back in that scenario where you have the stock on an uptrend, the 50 period in an uptrend, and the 200 period following in an uptrend, and the stock is using the 50 period to bounce its way higher. That's the ideal bullish scenario on every time frame. The 30-minute, though, can change really quickly. So we kind of have to talk about that every day, because you can get that scenario from a completely flipped image in like a couple of days on the 30-minute. So now let's move on here to the 4-hour. 4 hours, of course, a little bit slower moving chart. However, right now it's very much so in play. We're currently less than 1%, 0.8% away from the 50 period on the 4-hour, and we're about 2.1% away from the 200 period on the 4-hour. We're forming a channel in between both of those. So listen, any downside test of the 200 period, it's really simple. Bulls, ideally don't give that up. Bears, giving that up is your best case scenario here. But the more immediate level, the 50 period, less than 1% away here. Bears, that's like your 200 period for the Bulls. You don't want to give up the 50 period if you're a bear. We've seen it given up recently in the last couple of days, but it was in off hours. And off hours need to be taken with a grain of salt because the volume is so low. The sample size just isn't there to get a real opinion. So Bears, any test of this 50 period on the 4-hour, ideally you want to see that reject hard. And the market kind of tell you, hey, we're not ready to do that yet. Whereas Bulls, best case scenario is rip through on high volume and either don't look back. You guys know I like to see confirmation, pull back, and bounce quickly off that 50 period, reclaiming that as support here on the 4-hour chart. That would be a beautiful thing to see. Now, the most important chart of all is going to be the daily. Okay, and the daily is wildly in play right now. Now, remember, it's a daily. It's not going to show any after hours movement. That's okay. The 50-day moving average is currently at 170.83. All right, as of the closing price, about 4 points off. Now, listen, Bulls, we got really close to testing that here today, and we held it. That's good, and you can see that wick down, right? If we test that, Bulls, just a repeat, listen, I don't care if we hold that thing off 17 days in a row, as long as we don't ideally give it up. And we don't do it for a couple of days if we do give it up. So Bulls, any retest of that 50-day moving average, I want to see that hold as support, but really I think the real story here is each $5 increment, right? Because on Tesla, that's really what we're looking at. If the Bulls could retake 175 and try to use 175 for a test upwards of 180, man, that would be a winning day, I think, for the Bulls. Bears, if you can use 175 to reject hard off of that and head down and give you some momentum to test that 50-day, because it looks like some momentum might be needed here, crack downside through the 50-day and get below 170 all in one move, that's a big win for the Bears, all in a single day. And that would be great for you guys to see. And that's really the obvious story on the daily. Now, implied volatility, really, really important here. You can see it's still sitting very low in comparison to the last 3 months. Now, IV needs to be contextual, guys. It needs to be compared to itself, not other stocks. It has to be compared to itself. And if you're looking at a new trade, don't necessarily compare the expiration you're going with. Compare your personal intended trade time frame with that same time frame in the past of IV, if that makes sense. So, let's say you're looking to buy options. Let's say they expire in 6 months, but you're only looking to hold them for 2 months. Look at what IV is doing currently in comparison to the last 2 to 3 months, right? Because for you, that's really what's relevant. You wouldn't look at IV over the last 6 years for a 2-week trade, right? Or vice versa. That doesn't make any sense. And, ideally, just like with stock price, if let's say you're going long, but with IV, this is just for buying any options, calls or puts. You ideally want to buy when IV's low and sell when IV's a little bit higher or flat, I suppose, and you're correct directionally as well. Because that adds a little bit. That's like a cherry on top, or sometimes more than a cherry, onto your profits, right? And for example, a stock can be flat, but if IV's tanking, that Vega crush, especially that theta decay as well, it's going to eat away your contracts. Guys, think of Vega as, I think most people just think of theta decay as like a hidden killer. Well, Vega can do the exact same thing, sometimes even more quickly. Okay, so make sure you're paying attention and ideally not buying options unless it's part of your strategy, and you have a reason to do so when IV's really high. That's typically going to be a tough position to try to outrun. So for me, if I'm buying options, I like to wait until I have a strong directional bias with a lot of safety nets the opposite direction of the direction that I'm looking to go. So if I'm going long, I'm waiting until I have a strong long directional bias with quite a few safety nets on as many time frames as possible to the downside. And since I'm going to be buying calls in that scenario, I want to wait until IV is really low, ideally. And if it's not, I can still take that same position if IV is really high by taking the other side somewhere. So if everything's lining up except IV is really high, it's like, well, I don't want to buy calls, IV's so high. Well, what benefits from high IV? Okay, let me take the other side instead. Let me take a long position by selling puts or selling an option spread of some sort to try to benefit from a long directional move or an up directional move to make that more clear, and perhaps a fall in IV. Right, there's IV should be a big consideration of how you decide to position yourselves with options. It's really important, guys. Buying calls and buying puts is not the only way to trade options. In fact, it's with all the other things at your disposal, long term, simply buying calls or buying puts will likely make up less than half of your options trades. Not even all your trades, just your options trades. Simply buying naked calls or buying naked puts just by themselves, that'll probably be quite a bit less than half of what you're doing. And by the way, just so I don't confuse anybody, naked is typically verbiage used when selling. What I mean is just buying like some calls without any spread, right? Just buying calls or just buying puts. Again, likely to make up less than half of your options activity long term. Just because there's so many other ways to position yourself that you'll find over time end up having more of an advantage, more edge in a lot of different scenarios. Now let's take a look at the expected move. Now tomorrow's really easy, guys. Thursdays are easy because we have weekly expirations on a stock like Tesla, so we have an expiration tomorrow. The expected move by Friday's close, May 17th, tomorrow's close, is plus or minus $3.58 per share. That's compared to today's close, Thursday's close. Right, so that's the volatility expectation being priced in by the market here today. Now you might be thinking, well, okay, but directional bias is still important, of course, right? I feel like a lot of the times I'm always hyping volatility so much because it's so overlooked and it's so important in actually making money long term that, of course, directional bias is still a core fundamental thing that we have to look at. But we can look at that here by looking at the volume. What's the market giving us here in terms of their bias? It's actually interesting here today. A little under 1.3 million total contracts traded today, 665,000 calls, 614,000 puts. So just barely, guys, just a slight call side bias here today. And the 0 to 20 delta range, those are going to be the highest concentration of short-term speculators. 296,000 calls and 204,000 puts. So we get a little heavier on the bullish bias when we go short-term speculators compared to just the overall, but still a call side bias in both. Thank you guys for listening. Listen, the best thing you can do to help grow the channel and just to show me that you guys appreciate these, literally the best thing you can do is free. Just leave a like and then get out of here and enjoy your day. I greatly appreciate it, and that helps out tremendously. And I'll see you in the next one.